All right, you are here because you want a better way to invest and trade that isn't disrupting your sleep, isn't so stressful, doesn't require you to be super responsive, check the phone all the time, on the computer all the time, that delegates and outsources the decision making and actually executing the trade using the advanced tools that are available to us in 2025 of AI, automation, and so on. So I'm going to explain to you in this demo. Aloha, welcome in, much love, Trav here. If you don't know me, I'm an adventure entrepreneur living on Oahu, and I'm not a full-time trader. My full-time is working in adventure tourism. I love to be outside, live my life outside. I don't want to spend time on the charts. So a little bit's okay, but I want it to mostly run for myself. I do have a background in strategy systems. I was a professional Magic the Gathering player in my 20s, actually. I was one of the top players and good at developing strategies. And that has helped me over here. But I don't need to explain myself or appeal to authority or anything like that. I'm just going to show you the backtests and explain our methodology. We have the best backtests in the industry. I'm saying that for a fact. No one has proven me wrong yet. So I'm going to explain first the backtest, what to look for in evaluating trading system backtests. I'm going to explain to you the strategy, and I'm going to show you how to automate it, and I'm going to also explain how to get started, whether that's for free or if you want to pay and join the inside with us. So lots of value coming for free. First, the backtest. So here's a backtest that we have for Bitcoin. By the way, we're using TradingView Strategy Tester, our indicator. TradingView is a charting software, and the strategy tester is a backtesting tool. So here's a backtest on Bitcoin where it shows this is going back to 2015, 76% profitable trades. Here on Bitcoin, it has a max drawdown of 57% for a 1 million% return. Now, I want to note that your drawdown of the backtest is totally adjustable. The return would be less though. You could draw down more in the backtest, or your return could be more. The drawdown is something you can simply change by changing the position size. What we really care about is, can we beat buy and hold of the best assets through investing? And I'm explaining the strategy for how we can in a little bit. So stay curious, stick along. But when comparing buy and hold, we need to know that Bitcoin has had multiple drawdowns in its lifetime of 80 to 85%. So if we're comparing drawdowns, 57%, yes, it's a huge drawdown. You could do less than that if you want, but remember, buy and hold is not safer. Buy and hold is at 85% drawdowns. Here we see on our chart, the green line is our system. The blue line is buy and hold. When we first did this, I did not think we could beat buy and hold, but we did, and it's really amazed me. Now, the problem with most backtests and why they don't repeat in the future is they don't look back in time and history enough. History tends to repeat. It's not exact, but it rhymes. So most trading systems are going to show you a system that only worked on one asset for a couple years. They're going to optimize it as much as possible to make it look amazing. But what I want for our trading system is what we call robustness. We don't want a fragile system, we want a robust system. A fragile system is you change the asset, you change the time frame, it breaks. A robust system, you change the asset, still works. You change the time frame, it still works. So I want our system to work on all the major asset classes, crypto, precious metals, and NASDAQ. I want it to have, and stock market indices. I want the data to go back hundreds of years. I want to include the 2020 COVID crash, to 2022 bear market, the 2008 great financial crisis, the 2000 dot-com bubble, the 1987 flash crash, even let's put in the 1929 stock market crash if we can. So by doing that, we create a system that is extremely robust to anything that could happen. And most of these trading systems blew up during those time frames, but ours didn't. So I'm going to change nothing, and we're now going to go to gold and go ahead and look at gold. So gold, now we have the backtest on gold. Same thing, 41% max drawdown, which is less than the drawdown of buy and hold for gold. Gold goes back, our data on TradingView, the TradingView chart goes back to 1833. 50% profitability, 787,000% return. Now changing nothing again, the exact same trading system, we're going to go over to NASDAQ. If we look at the NASDAQ, here we are equivalent to buy and hold, but with a much less drawdown. Here we have a 48% drawdown compared to, if we go back to the 2000 the 2000 dot-com bubble, the NASDAQ actually drew down 80%. And if we see why we outperform buy and hold, it's because if we look at these major bear markets, we do an excellent job of sidestepping them. So let's go back to 2000, and I want to show you how well most people who are buy and holding held through this massive drawdown. Our system exited in October 2000 and got in on this backtest 56% lower, over a year lower. So this does an excellent job of sidestepping bear markets, which is one of the reasons why it works. Now, just to show you, I don't want to over optimize too much, but NASDAQ and S&P 500 move a little bit different than gold and Bitcoin, which are more boom and bust assets because of the constant buying of 401ks. So if we're just to change how we exit, just the click of a button, this is what the NASDAQ backtest looks like now. 42% drawdown for a 78,000% return. It's really, really impressive. And now if we look at this bear market, this is why the system outperforms. I'm going to explain it in a minute. It has to do with the credit cycle and the business cycle. But look, it gets out in October 2000. It gets back in April 2003. So it's actually out of the market for almost 2 years. And it gets in 68% lower from where it exited. So let's go ahead and explain the system to you now that you see the backtest. And again, I haven't seen better backtests that include as many asset classes and go back in as much time period as ours do. So let's go ahead and I'm going to explain to you why the system works. I want you to understand this isn't some weird Forex strategy that's opaque. No, I'm going to teach you why it works, and I'm going to do this part for free, actually. So what are we looking at right now? This is the money supply. So we see the money supply in 1959 of US M2 money supply was 243 billion, or about 300 billion. In December, and now January, starting in 2025, we're at $21 trillion is the money supply. Over time, the money supply tends to go up because the expansion of credit and the printing of money. This is the problem of fiat currency. This is why, over time, if you invest in an asset like that's a hard asset that's harder to inflate than the dollar, it appreciates versus the dollar. So here's the NASDAQ going back to 1986. You see that it moves up and to the right. We have the same thing with gold. If we go back a very long time on gold, let's go to the monthly chart. Look at it, it just goes up over time, up and to the right. But you notice it booms and it busts. And we have the same thing for Bitcoin, which is a newer asset class. But while it moves up and to the right, it goes up and down. Why does it do that? Well, it has to do with psychology, and it also has to do with the credit cycle and the business cycle. What happens as rates get cut and enthusiasm comes in, and leverage builds up over time, and the leverage allows prices to keep rising. But sentiment changes and leverage gets cleared out. And even as it's moving up and to the right and the hype cycle dies out, leverage gets wiped out and those prices are forced to lower. And as price moves up naturally over time, more leverage comes in, and that leverage pushes prices up. So but there's later a bust. And this isn't just for a very reflexive asset like Bitcoin. This is true of gold. It's true of NASDAQ. It's just true of assets in general, because this is how the business cycle goes. And the leverage cycle goes is people get excited and they lever up, and people get wiped out, and they lever up from the bottom again, rinse and repeat. Over time, it moves up and to the right. So the problem with buy and hold, which isn't a huge problem, but it is a problem, is if you're holding through these drawdowns, I mean, if we look at gold, if you're holding gold through the 1980s, it didn't make a new high until 2010. It was actually 30 years underwater. And if you bought NASDAQ during the dot-com euphoria, it was actually until 2016, it was actually 16 years to get back to break even. Is AI going to be the next bubble? It might be, I don't know, but I want a system that decides that for me and can get me on the sidelines like ours has. So let's go ahead and look again at what our system does is there's a couple filters that save us. Check it out. We're looking at the NASDAQ here. See how nicely it sidestepped the 2000 stock market bubble. So what we're looking at on the chart, by the way, the blue arrows are buys and the purple arrows are sells. So what we're doing is we're taking the assets that have performed the best historically and have the most fundamental reason behind them why they should increase their value versus US dollar over time, and we're trading them with a dollar cost average buy and hold mentality, but we have certain filters that allow us to avoid bear markets. And we have the possibility of using leverage because we have stop losses that say we cannot lose more than X if this trade goes south, where buy and hold is potential unlimited loss. So there's the 2022 bear market. Now let's go look at the 2008. How beautiful is this? It closes its positions in 2007 and it re-enters them in 2009 when the market is 24% lower. Avoid all this stress. And with that year, you could do something else with your money, invest in your business, or put it in a cash account and make a little bit of money and not worry about it and come back in later. Let's go back again and look at, to me, the most beautiful thing is how well it participated in the mania of the dot-com bubble, but then it did an excellent job of sidestepping the entire thing. So let's go ahead and let's go look at uh, Bitcoin and gold a little bit to explain it a little bit more to you, and then I'm going to show you how to automate it, and then I'm going to show you how to get started, whether you want to pay or just do it for free is totally fine. So let's go back to Bitcoin. So for Bitcoin and gold, what is really useful is really valuable is not just the ability to sidestep some of the bear markets, which it does. Let's look. There was this big bear market in Bitcoin that it got out of. It actually, look, sold its position on this day. And then its next position, it got in 60% lower. It avoided a lot of this historic declines. And it's done an excellent job as well. I didn't check it right. Here it is. It does an excellent job as well of getting out at historic tops. So look at it, how well it exited at the top right up here on this day, and look how well it exited at the top right over here. So just to give you a little more transparency of what the system is doing, is it is buying either dips or breakouts. It's taking profit opportunistically on failed breakouts, and it's really coming in with this idea of dollar cost average and holding. So let's talk a little bit about leverage. So, and let's do that through gold, which has had a major bull run in the past year. Okay, let's look. Let's look at leverage. So I slightly screwed up the settings. I fixed them. I checked the wrong thing when I was trying to get back. So, I mean, back to Bitcoin. We'll explain the leverage on Bitcoin and gold. So, yeah, this looks better. Okay, let's talk about leverage when we look at gold. So, say that you take the first signal, because I know leverage is a scary thing, and you buy at this price, and you buy here and you buy here and you buy here. When price is all the way up here, you take some profit. Say price is all the way up here and you're in all these positions already and you have no more money, but you're floating like a massive amount of profit. You want to raise money to take the new position. Like, what if you're up massively on everything? You have stop losses that protect the ultimate loss. Even if you get stopped out, you're in profit, but you've ran out of money. So this is why leverage is a really powerful and useful tool. It's optional. You don't have to. You could trade in your 401k if you want, which is tax free, which is really nice. So if you're a 401k person, you don't need to use leverage. But it just makes sense. It's not like all in risk everything at the start. Since we use stop losses, so how do we stay out of the bear markets? The first one is stop loss. Since we have a stop loss, that defines our risk. So from the beginning, when we enter, we say, I can't lose more than X. And as the trade advances in your favor, the system advances your stop loss periodically when there's a new signal. So it's protecting your profits. But if the market turns south, it takes you out. So here, when the market turns south, it takes you out, price goes lower. And another filter that helps keep you out of the bear markets is the simple 200 moving average filter. So the 200 moving average filter is just the average price of the past 200 days. And simply not taking new positions, or at least not buying dips when price is under this 200 moving average, is a way to protect you from some of these declining markets. And it works on Bitcoin, gold, and NASDAQ, but it's even more important if you're trading something that's a little bit sketchier to have filters to protect you from buying in a bear market of something that's going to zero. So that's how the system goes to work. The thing is pretty customizable. I'm providing what I think are the best settings, but you can play around with it if you want, or not. Just use our custom preset and plug it in. So now let me tell you, well, first let me ask you, does that make sense fundamentally? I think it does. Buy and hold the best assets with basically filters to protect you from bear markets and a little bit of market timing and leverage to maximize exposure to bull runs. It's not really crazy. I'm not telling you to invest in something weird or buying something weird. I'm telling you gold, NASDAQ, Bitcoin, S&P 500, these are some of the best and safest assets. And what's safer than having protection from these deleveraging events that seem to happen every couple of years or every 4 or 5 years? And if you're investing for 20 years, you're going to run into them. And you might want to hold through them. But if you're like me, I would rather not. I would rather not hold through a potential 80% decline that takes 14 years to come back. All right, so how to trade it automated. So on TradingView, you have the indicator. You're going to click on these three dots. You're going to click Add Alert. So you're going to send an email. Now, if you want to just trade it manually or watch it for a while, you can just have it send emails. It's going to send you an email when it opens a new position. It's also going to send you an email when it closes a position. And how many trades do you expect? Well, when we look at Bitcoin, has a history of 15 years here, sorry, 10 years, 59 trades, 6 entries a year. It's not very much to do. And that's relatively similar on gold and NASDAQ. It's less than a trade a month. This is not day trading. It's a form of investing. So it requires a little bit of patience. Maybe you sign up and there's no signal for months. Well, hey, it's saving you from losing money. Okay, now you're going to click three dots and set an alert. If you want to trade it automated, depending on your exchange, they're going to give you a webhook URL. You're going to copy that webhook URL and put it in there. For settings, there's usually going to give you a payload message, and you're going to copy and paste it in there. You're going to click create, and that's it. It's totally automated at that point, which to me is a huge lifesaver. It's not just about saving time, but not making emotional errors. Why do anything? Why trade manually in 2025 when we have access to these tools? It just doesn't make sense. Now, you are going to want to double check everything and make sure your order size is accurate when you're automating it, but that's how you do it. Now, how to sign up. So there's going to be an option below to buy. And I'm just telling you now, we have been consistently raising the price on this thing as demand raises. I don't want to go that high, but in 2025, there's people in the industry selling similar systems for $20,000. And we started at 100, then 250, then 500, then 1,000. People keep buying it. And as it's proving itself and as it's working. So if you want to lock in a cheaper price, today's probably a good day to do it. You don't have to do it though. I'm not here telling you you have to sign up. What you can do is check your email. The first email, you might get it tomorrow, is going to be a link to the community, which is Discord. Follow the emails. I'm going to be messaging out alerts. I'm going to be sending you more historical backtests so you understand breakdowns of past bear markets. And you can follow along the system for some months if you want to see and compare it to your own investing and your own trading and see how it performs. Again, if you want, if you're sold, today is a good day to do it because the price, we keep increasing the price. But I don't want to pressure you. There's all the time in the world for this investing thing. Have time for you today, but we have time for you in 3 months or 6 months if you prefer. Also, if you have any questions, you can ask, please ask, join the free community and ask in there. And super excited to share with you and work with you and help you out. So appreciate you, much love, and look forward to seeing you on the other side. Peace.